guys, you are watching GRIP, India's leading multi-asset alternative investment platform known for helping retail investors go beyond stocks, bonds and gold. Now you must be thinking, but what is the need to go beyond stocks, bonds, golds and fixed deposits? The answer is, this is 2022 and the ways of making money are evolving rapidly. It is quite likely that the things that work for our parents might not work for us. Countries like Japan provide negative returns on savings and deposits. This means instead of earning interest on your deposits, you have to pay a service charge to the bank for keeping your money safe with it. On the other hand, stocks can be quite volatile, and only a few who have mastered the technicalities of the stock market are able to make any money from it. This is why investors are looking for newer investment opportunities. So, what else can be better than alternative investments to diversify your portfolio? By definition, an alternative investment is a financial asset that does not fit into the conventional equity, income or cash categories. You can find alternative investments that are churned through a rigorous due diligence procedure listed on the platform of GRIP. Don't know what GRIP is? Well, GRIP is a multi-asset alternative investment platform where users can invest across the entire risk-reward spectrum with options ranging from 10% to 22% pre-tax IRR and 1 to 60 months tenures. Currently, GRIP offers you 5 types of alternative investments: corporate bonds, leasing, inventory, startup equity and commercial property. Built as a technology-driven, transparency-focused digital investment platform, GRIP allows users to start investment at just Rs 10,000 and create a portfolio that best caters to their wealth goals. GRIP has enabled 440 plus crores in investment over the last years across 200 opportunities with nil defaults to date. So, what are you waiting for? Visit gripinvest.in and start your alternative investment journey today. And if you like this video, don't forget to subscribe to our channel.